welcome back to our weekly live webinar. So today we have some special guests on from Prudential. We have Mr. Allen and Noah. They're going to be going over a bunch of their products with us. So of course, as always, guys, ask questions. Let us know if there's something that you have on your mind that's going to be really helpful to everyone, because maybe you're thinking about something someone else is thinking about, but they can't get to the keyboards fast enough, or they're driving or something, right? So definitely let us know if you have any questions. Like I said, Mr. Allen and Noah are going to help us out, bring some more information about the Prudential product. Some of you guys have already been talking about it. Some of you guys already know. Some of you guys already have the actual contract. So if there's anyone out there, like I said, again, that has any questions or want to add anything, let us know. So without further ado, I won't talk too much. I'll let Mr. Allen and Noah get to it and go from there. So thank you guys, and I'll let you take it away.
Thanks, Brad. I do appreciate it.
Yeah.
My name is Alan Floresbach, and I'm the regional vice president here that works with you guys throughout the country. And I also have with us Noah Schlein. He is our internal wholesaler. He is the mastermind and genius behind all of our illustrations and software and other things. So it's great to be part of this. I do appreciate you guys letting us give some few minutes here to talk a little bit about Prudential. The great thing is, we are Prudential. We've been around for over 150 years now. We are a very strong company when it comes. I've always kind of made the joke. It's, you can see my last name on the form. It's like, every time I send out an email or give my email address, I've always had to spell my last name, but never once have I had to spell Prudential to anybody. So it makes it pretty easy for you guys to go out and talk to clients about us. And we are a piece of the rock, and so definitely want to go ahead and hopefully get your clients some help. Obviously, Noah put up our score, Comdex. We're still in the 95 range. We are one of the largest money managers in the country, actually internationally. The life insurance portion of Prudential, you think of Prudential, you think of insurance, but really we are a huge investment manager. Basically, we're one of the top 5 in the world with that. So when you really look at it, we do balance out a lot of things, and life insurance is a smaller portion of the company, but still very, very important to us. When they talk about us on the street and do our quarterly calls, the people always want to hear about how it's Prudential and how we're doing. So we included this piece for you. Obviously, sometimes your clients want to know a little bit more about Prudential, so we want to know that you can count on us as a leader. And like I said, we're easy to sell because the name's easy to sell, and people know us and trust us. So. A few things I'm going to have Noel kind of go through the products. I want to talk a little bit about some other things that we do that are a little bit different. The nice thing is we do have our own underwriting manual here at Prudential. We don't use a reinsurance manual or someone else's manual. Actually, we're going to go ahead and provide you a copy of it. These are our underwriting guidelines right here, along with our impaired risk and a lot of niches that we have. We've always kind of been known that we're a little good with fluffy guys. I don't know if you can kind of see me on camera, but I'm not 180, but we're really good with that. We do have some niches as far as tobacco, but the only time we're actually going to mark you a smoker is if you're actually vaping tobacco or actually smoking cigarettes. Otherwise, you're going to fall into our non-smoker plus class. We're really good with different kinds of cancers, prostate cancer. We're also really good with breast cancer, prostate cancer. We're really good with I always kind of put a really good if you're taking care of yourself, even if there's something wrong. So, if you have sleep apnea and you utilize your mask and stay good, we're gonna help you out. If you have diabetes and you are controlled diabetic, we're gonna be probably one of the top carriers for you. The other big thing that we have, especially as we kind of get into the year of we're really getting close to that 2025 deadline with estate planning. We have the capacity that can help you with the large cases. We do a lot of larger cases here at Prudential. So if you have one of those, right now we're kind of post-COVID again, so we can do over 110 million with permanent cases and do 140 million with term cases. And if we need a little bit more, I might even be able to get a little bit more than that. We can write, if your client doesn't have anything in force, we can write 65 million without having to go facultative. That is our auto issue amount. So The other thing we do well is foreign nationals. So if you foreign travel, foreign nationals, I know more of that's coming down. A lot more people are traveling again throughout the world. So we do that really well for you. We can help you out with those type of situations. So, just a few points. We're gonna send that out to you. You guys have a copy of the underwriting overview. The nice thing is if you go down a little bit more, Noah, we give basically our build chart right there. A lot of times when I go around the country and I go into the different BGA's offices that have underwriters in them, it's our build chart that they're looking at. You know, we're kind of the gold standard to go by, so makes it easy for you guys to look up what your clients are right now. Go down just a little bit more, Noah, and it talks about the age and amount requirements and also underwriting credit opportunities. All this is inside there. Also, our financial underwriting guidelines, age and amount requirements. So, like I said, all of it's right out there for you. We do have our own underwriting manual, so we can do things a little bit different. If you guys want to do a little bit of field underwriting through ours, we have the information right here for you, so you can kind of look at your client, look them up. Keep an eye on the over 65 and the under 65 categories, especially on build. For some reason, you get over 65, you can have a few more Big Macs, so and be good for you. So
Hey, Alan,
yes.
do you guys mind zooming in a little bit?
Oh, sure.
Yeah.
Uh,
Sorry, everyone.
oh
Yeah,
no, you're
absolutely.
fine.
You know, I turned 50 and all of a sudden my
Perfect.
far-sighted vision started going away. And so I bought bigger TVs. And then eventually my wife said, why don't you go to the eye doctor instead of keep buying bigger TVs? I'm like, oh, I suppose. So,
Hey, got the 85-inch and was like, you know what?
well, I ran out of wall. You know, eventually you got to run out
Yeah.
of wall. So I'm like, well, do we need a bigger house? No, she's like, go to the eye doctor. I'm like, all right, I'll go to the eye doctor. So,
I do have a
um,
quick question.
oh yeah, go ahead. Of course.
I'll read it out here. It says tobacco and smoking. I think I heard you say it earlier, but I'll just read it. It says tobacco and smoking. What is your position when it comes to vapes? And I know we're entering a realm where marijuana seems to be at an increase so much to the point that increases alcoholism in some areas. What would be the underwriting requirements on that topic?
So, I think the marijuana guidelines are in here, and they're actually kind of looking at some of those right now. Let's start with the tobacco guidelines. Our tobacco guidelines is that if you are vaping now, it used to be that they said there was no tobacco in it. We know there's tobacco in them. So if you're vaping, it's going to be a smoker. You know, if you're smoking cigarettes, it's going to be a smoker. If you're smoking a cigar and it's very limited usage, you know, hole in one, having a baby, you know, occasional one on the golf course. You can get up to preferred best with those. Otherwise, if you're chewing or dipping or the patch or the gum, all of that other stuff, it's all gonna be non-smoker plus with us. So, for marijuana, there we go. Look at Noah's on it today. So,
Genius.
up to up to three uses a week is still non-smoker plus with us. We are looking at gummies and drinks and stuff. You know, if you have someone doing that, let us know. I might be able to do a little bit better than non-smoker plus on it. So, and that's just kind of actually we just had a meeting last week from underwriting, so a little bit more to come out in that the next few weeks. You know, if you're doing it every single day, it's probably still a decline. Just because, you know, we are worried about it leading into some other stuff. You know, if you have a medical prescription for it though, we will never rate you on the marijuana. So because at that point then it becomes that's what you're treating for. So if you know would never be we never utilize it for that. So does that answer the question?
I believe so.
Oh.
Just because I was a little slower on the cigar one as well, we also have pieces on that.
Well, you know, this is actually a good point. The cigar one, we've done meetings in the past too, where you know if you got a cigar users group in the area or a cigar bar in your area, you know, do a meeting and bring a bunch of the guys in and say, hey, you know what, we got companies here that can get non-smoker plus rates. So always maybe a good sales idea in the back to, you know, if you're trying to do an outing with some clients or something, not a bad idea to how as a whole group that we can get a little better rates for you for. So
Absolutely. We have a
yeah,
cigar bar in town, so that we have two cigar lounges in town, so that's actually a really good. It's a really good point.
bring it in, takes, print out the one that Noah just put up there with the cigar usage on there. We actually got another client piece that's a little nicer too to utilize for that, but bring them in and say, hey, you know what? Hey, enjoy a nice cigar on us, and hey, let's talk about writing some apps. So,
Absolutely.
oh, what else we got here? One other thing let's before we get into it, before we get into benefit access letter, let's do Pru designs quick, like Noah, and then I'll let you kind of finish product up at the end here. One thing, I talked a little bit about the estate planning coming, here shortly, reverting back to where it was. It's kind of the talk of the town, especially in our industry. Um, One nice thing for us is that we have 12 different people on our advanced market staffs. We have several of them are JDs. During COVID, though, they didn't travel as much as they did and spent a lot of time developing some really good pieces for us. And one thing that came out of that is called our Pru Designs. And so they can work through you. We actually have close to 20 different ones now. And this is just some of the things that we have available for them. And basically what it is, does it go into it a little bit more there, Noah, as you go down? Basically, if you look, go back one. I'm sorry, Noah. What we'll do is actually take your client's information, run it through here at Prudential, and we can go ahead and do a needs analysis for it. This one here talks about the potential estate tax. If you can give us just kind of the basics of your client, we can go ahead and put that into, basically this is going to be the front of the illustration. So it's going to talk about the marketing pieces inside there. There's going to be probably one on talking about the history of the estate tax. There's going to be one talking about the state estate tax. And then it's going to go into what your potential risk is for estate tax. All of that's going to be on top of the illustration that you can provide your client. Nice thing is you guys can sit down, go through it, talk about it, and that what leads into it. So here's the situation. Here's how it looks. Here's what's going back. You want to go back 2 more slides to where you were. It's the different ones that we have out there. I just want to cover just one down, please. There we go. Premium financing, interfamily loans, private split dollar. The big one right now is the basic estate tax calculator. We have one on leverage gifting. A lot of times the leverage gifting and the estate tax kind of goes together. You have a couple kids and one's part of the business, one's not part of the business, and one's kind of doing their own thing. How do you equal all those out? One thing we do really well on here is the last one over there is mirrored loans. If you have clients that have loans on their policies, whether they know it or not, a lot of time looking at older whole life policies, their policies were paying them for themselves, and now the loans have grown. Or during COVID or some of the other times, just things in life that you've utilized your policy for the living benefits of the policy and utilize and pull some cash out. What we can do here at Prudential is take your loan and your policy and pull it over and put it onto a new Prudential policy. A lot of times if they're about 30 to 40%, we can go ahead and roll them into a new policy, and with those values inside your policy, take care of the loan, get the loan wiped off on a cheaper chassis than what the whole life is. If they're really low note, we can do policies up to 94% loaned out, which is a lot higher than the industry. Where that helps saves you is that those clients are in risk of their policies blowing up, which is going to result in a large tax gain. And so sometimes tax gains as far as, hundreds of thousands of dollars. So we can roll them over. Our rule of thumb is that it has to have $25,000 of net cash to roll it over, and it's got to work. So it's got to make it through the first year or two, looking at it. So Dr. Brent and his group, we can help you with those if you run across them when you're doing your client reviews. We can certainly help you with that. So
Absolutely.
Noah, you want to kick it off? I'm going to hand it over to you. You want to go through our various products that we use, and I'll interject here as we go through it. So thank you.
Absolutely. So pulling up the product portfolio here, and let me zoom in so everyone can see. I'll start us off with just kind of a general overview of where our products lie as far as their focus and their risk reward. So we do have 2 term products available. One's going to be your typical term. We're looking anywhere from term 10, 15, 20, 30. The other one we're looking at is a little bit different when it comes to underwriting. It's for short-term coverage. Typically, you're looking for clients that need that protection for 1 to 3 years. I'll get more into that. We do have survivorship products as well. I'll start off with the SUL protector once we get there, but that's going to be our bare bones guarantee survivorship. We have our fixed products, we have our index products, and then we have our variable products all along the spectrum. And the way I divide our products into two categories, you're going to be either looking for death benefit guarantee focus, or we're looking for products that have that death benefit but cash value accumulation focus as well. And so going into them in depth now, again, we have our typical term essential. The way I like to look at this is working backwards from 85 as far as issuing. So anyone who is 75 could get up to a term 10. We do allow saving age here at Prudential, so we'll go back up to 6 months. So say you have a client who's 76 but still looking for term insurance, had that recent birthday, we can still issue that. I've come across that a couple times. Huge save. Not a lot here to talk about other than minimum face amount we're looking at is 100,000. We do offer term conversion privileges. They're able to convert to any of our permanent products as long as they're still in their eligible period. And I can go into that in more depth another time if anyone is curious. And then
Just a
going
note
to
on
our,
that. No, I'm just gonna
yes,
interject. Don't forget, we can actually write two terms and roll it into a survivorship. So it's always gonna be
yes.
double the lower face amount up to $5 million. So just keep that in mind. We are one of the few companies that you can still actually convert to any of our permanent products. So keep an eye on that. And it's, up to age 65, but always at least 5 years. So even if you have someone 65 to 70, you always have at least that 5 years. So
Perfect. And I will say that individual policy is still contractually available. They don't consider the SUL conversion contractual. That being said, we allow it. We allow it up to 5 million. If anything, we're looking at possibly increasing that along the lines rather than getting rid of it because it seems to be popular. Even so, you can have one term product, and if the other partner is willing to go through underwriting, you can do that conversion as well. So you can bring in one term product on a person, have their spouse come in through underwriting and convert that into a survivorship. So thank you, Alan. That was a very good
Oh, that's
catch.
good.
And
And
then
one other
our Pru
thing,
term one.
Noah mentioned saving age. We're actually an age actual company. We're not an
Mhm.
age nearest company. So a lot of time, well, 50% of the time, we're going to be cheaper than the other company just because we can backdate 6 months from age actual, where they can only backdate to your 6 month birth date. So just keep that in mind when you're running us, that we are an age actual company. We can always nice to make a guy a little younger. So.
Couldn't agree more. And then our Pru term one here is our other term product. Again, this is for short-term needs. It says 1 to 5. Realistically, you're better off around 1 to 3. Those prices are going to go up over time. It's for people looking for that short-term buy, sell, key person, a lot of business needs. It does come with a smaller face amount. The biggest difference comes to how we underwrite. All premiums are unisex. Gender does not come into play in year one. You do get underwritten, but only in the sense of for converting. You're going to be written as a smoker or non-smoker for that first year. If you're going to be rated, they would decline you for the Pru Term 1, though. So keep that in mind as well. There's other specifics, but again, don't come across this a lot. If you do come across a short-term need, though, feel free to reach out. We can go into more detail. Getting into our permanent products, we have our Essential UL. Your common needs here, it's the smallest face amount allowed. So we're allowed to issue this at 25,000. You won't see a lot of other products dip below 75,000 or 100,000. So if you have someone that just needs that final expense permanent product, this is typically where this product will come in. It's just a fixed account. It's our closest to whole life. You can solve it for guarantees. Um, it's yeah, it's not overly common unless you're looking for that lower face amount. And even then, you can only issue anything below 100,000 at non-smoker. And the reason I say it's not overly common is because when you go to our Founders Plus, our first index product, and you do not need a variable license for this product either, it also has that fixed account option for you in here. And it's typically right in line with whatever is going on with the Essential UL. So as long as you are okay with a higher face amount up to 100,000, your client's probably better off with our Founders Plus index. So within that, besides the fixed account, you're looking either at an index account mirroring the S&P 500, excluding those dividends, or we have an exclusive partnership with Goldman Sachs for their Voyager account. So the biggest difference between these two accounts is our S&P 500 is following our American market. The Goldman Sachs is actually a managed account and it's global. And their main goal is to, in times of volatility, maybe at home, they're seeking a more flat, steady gain. They have a goal of producing 6% returns yearly. Again, that is their goal. And it's all looking to lower volatility. If you're not quite sure where we're looking, you don't want to exactly trust the S&P 500 at the moment, you may be interested in the Goldman Sachs. We do have pieces that go into it more specifically, but I'll save that for another time. Moving along, because keeping an eye on the clock, we also have our Index Advantage UL. So the difference here between that and the Founders Plus comes mainly in our uncapped index account. There is a spread, and I would have those numbers pulled up on another screen, but keeping going. So, excuse me. This one is going to have a little bit more cash value accumulation. It's not a drastic difference versus the Founders Plus is going to be able to dial a no lapse guarantee. So we're able to dial no lapse guarantees on the Founders Plus and the Essential UL going backwards all the way out to age 120. If the client were to set a Guinness Book World Record and live beyond that, they would be forgiven for all premiums. The policy stays in force. Basically, congratulations, you're done, you made it, your insurance is there for you, don't worry about it. But the Index Advantage UL, while it will have guarantees, it's not dialable. So that's another factor to keep in mind when deciding between the two. Alan, anything?
Nope, you can keep going after this one. But
Perfect.
we have
So
a new index that's gonna be coming out here in August, so keep an eye out for that too. I'm hearing that one's gonna be really, really good. So I think we got a couple of index products right now that are kind of on the bottom of the shelf. So we can kind of go through that, and we're definitely looking forward more to the new product. So for the honor of time here, I can help out. Our FlexGuard IVUL kind of bridges the gap between our variable market and our fixed market. The nice thing with the FlexGuard is that you do get a little bit more upside potential because it is actually a variable product. You do need to be variable licensed. If any of you guys are out there selling like RILA annuities, this would be a very similar product to that on this side. We're one of the first ones in the market to actually pull it over onto the life insurance side, pull that concept over. I'm not going to go too much into it, but basically, instead of a 0 floor, you're going to have basically a -10 floor. So anything between 10 and 0 goes up to 0. You can possibly lose money if it goes beyond -10. So anything -10 and below would be, let's say you're -12 on your statement, then it'd be a -2. So you get the first negative. The nice thing for taking on that risk, though, is that you get a much more upside on the top. And there's two different upside potentials in there as far as our buffered strategies, and you guys can go ahead and look through those if you'd like. But again, it's really similar to the RILA annuity. And the FlexGuard, we actually use that on our Prudential annuity side. So it's pretty common in the industry, and a lot of the clients know what it already is with that, and a lot of the producers that you work with do. So moving on. The thing about Prudential right now is that we really do control the variable market. If you look at all the variable sales that are done inside the industry, we make up about 38% of the market. The number 2 competitor of ours only makes up 8% of the market. And what we really try to do is, we do have our cash accum, and we do have our fully guaranteed products. So like VUL Protector, as long as you pay your premiums on time and you have guarantees out to 120, you will go ahead and have a guaranteed contract, no matter what the market does. As long as you pay your premiums to the no lapse guarantee amount, you will. And we do have some really good underlying accounts, over 50 underlying accounts inside of there. It's one of our most popular products. It's very, very, very competitive. Like I said, when we talk about 38% of the variable market, we make up VUL Protector, because of its age 120 guarantees, is one of our most popular products. When we look over at CP2, that's been our flagship product that we've had for years. I've been around here Prudential for 25 years. I think it's been at least 20 years that it's been here with us. It's a really good cash accumulation product. We talked a little bit about loan rescue before. Sometimes we'll actually use that product for loan rescues because it does a really good job of generating cash in there and taking care of on a low cost basis. So moving into the survivorship market, I assume, Noah, we have basically 3 survivorships. We have, there's 17 survivorships left in the market right now. It's a declining market. We have 3 of them. Typically, when you're going to run illustrations, we're probably going to be top 10, if not top 5 of all 3 of these products. The first one we have out the bat is our SUL protector. It is a GUL protector, just like we've been selling for years. It's one of the few left in the market, fully guaranteed out to 120. A lot of times, if you have a trust sale and a estate sale, this is a product that'll go into it. So it's a really good product for that. Really good guarantees. It is a fixed product. The second fixed survivorship product that we're having a lot of success this year is a survivorship index product. The index inside of there, the nice thing about this product is that right off the bat, full pays, it does really, really well compared to the market. But let's say you have a future business, or you have a business and you're looking to sell it down the road, or you're a little cash tight now, but down the road you're going to have a little bit more availability. This is one that you can structure to do a little bit more catch-ups going down the road. So maybe you need to lean the policy out the first few years and then catch up after that. It's certainly something, I'm 60 right now, I'm 50 right now. The kids are going to take over the business in a few years, or I'm going to sell the business back to my partners in a few years. I'll be a little bit more cash rich at that point in time. This would be a good product to look at. From a cost perspective, though, it's probably one of the cheapest among the 3. The last product we have is the other one that we're doing a lot of business on. Again, this looks really close to our VUL protector. It's 120 guarantee. As long as you pay your premiums on time and the amount that available to go ahead and guarantee it for life, it's going to be guaranteed for life. No matter what the market does, it's going to be guaranteed for life. The nice thing is the VUL protector and the SVUL protector, you do have that variable component inside there. So you have a GUL contract, but it does a really good job of generating cash. One thing that GUL doesn't. So keep an eye on those products. Check out the illustration, check out the IRRs in it. Check out that, year 17, year 20, year 25 cash flows inside the product. Again, underlying, you have the guaranteed for life, but again, you never know how life kind of throws you curveballs. And so this is a great opportunity for that. So I think one last thing we left in there was our bar. We do have a chronic illness rider that you can add to our permanent products. We actually have one for survivorship also. I'll leave you guys to that to talk about. The nice thing is the one caveat that we do a little bit different is that the amount available for the rider that you can utilize for future healthcare costs is the amount at the time of claim. So let's say you buy a Founders Plus product for $1 million, you put it like on a Type B death benefit. Over the next 30 years, it grows to 1.5 million. The amount that you have available to pull out for chronic illness is the 1.5 million, not the initial. It's always whatever the amount is at the time of claim. So I got just a minute left here, Brad. I put it kind of right up to the end. Do we have any questions out there that I can help you answer?
Well, there is one from earlier. It says requiring diabetics. Do you require A1C and insulin minimums and maximums?
I would have to refer that question to an underwriter. So
Okay.
we looked through the guidelines on here, and we do get some pieces right on diabetes. We have what's called RX for Success. We have a whole, I think there's 30 different ones, everything from like sarcoidosis to diabetes to, and it's kind of a nice 2-3 pager on the questions they ask your clients, but then also kind of put them into where they might rank. It also educates you a little bit on different categories. So we can certainly pull that out and get an answer back to you on that.
Good deal. And I'll make sure that, again, if you want to send that information or if it goes any deeper, I'll chat with her and see if there's anything more, and then we'll get into it if need be. Uh-oh, we got some Zoom going on.
So I
No,
believe
no,
that's
so
the
quick,
range
he's
you're
pulling it
looking
up.
for on the
Yeah.
A1C would be 3 to 6.
Okay. So that answers that one. I think that was it as far as questions to ask here. Yeah,
And
that's
then, yeah.
And
go
Brett,
ahead.
if you get some questions afterwards, certainly give us a call. Noah and I are always available. Noah's the brains of the operation. If you need some illustrations done, or if you need maybe some pre-designs looked at, you come across a loan on a policy and they want to get it taken care of, we can certainly help you with that too. So some great opportunities coming up.
I will say
Awesome.
I'm actually able to run mirror loans myself without going out to Prue Designs. That's one they have given to us as well. So
You
can
can
get
turn
those to
around
you
really
even
quick.
quicker,
Yeah,
very quick.
absolutely. Turnaround's good. Well, and so I always tell people if there's only 3 questions, there's not many questions here. That one I can get answered myself here, but that just means you guys were covered everything very well. Now again, when I call these guys, we'll definitely have a conversation. Like I said, again, if there's something that I can reach out to you guys for, I'll definitely do so. Other than that, I think we're good.
All right. And like
So
I
I
said, keep
definitely
an eye out
appreciate it.
for term conversion opportunities too. If you come across an old Prudential term, like I said up to age 65, but always at least 5 years. Don't forget, we do a lot of term conversions. We've been, basically one of the #1 term sellers for over the last decade. So there's a lot of old Prudential terms out there, and you don't necessarily need to be the agent that wrote the original policy. If you can, whatever agent finds it, and it's a good opportunity for them, we'd be more than happy to process it with you.
Awesome. We'll keep that in mind. So you guys heard it. Mr. Allen, anything else you guys got for us?
Nope, nope. I'm gonna, Minnesota here, so we only get like 3 good days. So
Better go enjoy it.
it's actually there's no snow on the ground up here today, so it's kind of nice that maybe get out and enjoy it and have a great
Absolutely.
summer. So
I couldn't imagine having snow on the ground right now. I know I made the joke earlier, but I literally couldn't imagine that.
well, we get hail this time of year, so you never know. I mean, we're ready to plow hail too if we need to, but
Yeah, see,
Selling
I'll just stay
Minnesota
down
hard.
south. What about you, Noah? How's the weather looking out there?
We've got a gloomy day out here in Culver City, so not bad. I'll take it.
Yeah,
Better than the heat, better than the cold.
there you go. I'm sure we'll get
always
up
sunny
to
in
probably
California.
a little bit over 90 here. So we'll just enjoy it. But I do appreciate it, guys. So again, guys, if you guys have any questions or anything like that, we really appreciate Noah and Alan coming out, really talking with us about this new Prudential product. Or not new Prudential, new to us, right? But definitely going to be making sure we get some business to you guys. So again, any questions, let me know. I look forward to talking with you guys. Again, if you want to get contracted, anything like that, we'll talk soon, or you can reach out 800-777-9322. And again, guys, we always appreciate you guys coming on every Tuesday and supporting what we're doing here and bringing you guys some information. So again, I really appreciate you guys, and we'll talk to you soon.
Thank you for having us.
Yes, sir.
Thanks,
Thank
guys.
you, guys.